Hello. Hopefully this is all working fine. Just a quick update on Bitcoin and crypto the way I'm seeing it. This is more for the communities I'm in. Easy typing, but we're at a pretty critical level here, so I just wanted to flag it. In particular, this AVO signal here, the vertical bars in the background of this indicator, it's been dropping pretty hard since this level, and that was a pretty major rejection now. That since then we haven't really got back that close to the 50 EMA. I was kind of expecting it to come back up into here, which that level there of 4 hour, I think it's roughly around the 200 EMA and the 4 hour, around the 800 EMA. So was expecting maybe us to sort of eke back up into the top of this candle, but it's not looking strong. When you look at this daily candle, that's a wicked daily candle. We've got 3 hours left on it. If that closes below that wick, or particularly below that wick, then I'd say we're pretty down and at least sweep the wick close here. If we do that too, then we're potentially going to be exiting Bollinger Bands daily, which doesn't happen all that often. As you can see, it does happen on the upside. When it does, it sort of sits and runs for a little bit, for a few days at least. And to the downside, same sort of thing. Once you punch through, needs a decent push to come back in. And typically it will go sideways, particularly when there's low volume and low volatility in the market. Same thing here, we sort of drop down below the Bollingers, sideways, drop down below. So at the moment, we're really only sort of in this level. So it's pretty critical on the daily. The other thing too is this volume profile. I've done this so it goes back basically to May last year. So it picks up all the trading within this low trading area. Haven't done it back, so it goes back further into this area here. But we're actually sort of inside the value area high now for this overall region. I think on the last video I showed the same thing, but mainly this top region. We've now broken below the value area, the top region, into this. So we could pretty quickly see 23k hit. I'd be expecting a bit more sideways after that. If the general market continues to go down over the next few weeks, which historically you see an uptick early to mid-September, there is still a chance we can move back down into this, so roughly 2,000, which I think we go back through all time. 2,000 levels, the most traded zone, around there. But for this last year, 700 roughly was the most traded level, so that's your favorite low. So this here, particularly down to that 20k would actually be, if you treated this as up the top, all of that. Well, sort of getting back into that 19-20k region. So that a little bit of signals there for the downside. Upside, there's not a lot at the moment. Momentum still to the downside. We are in the PMARP zone, which if we cross back above this 15 level, PMARP, then I'm suggesting we get a little bit of a bounce, which could bring us back up into these areas. 200 and the daily is 2700 roughly. And like 278 for the 800 MA. They're potential bounce levels. Sure. But at the moment, momentum to the downside, we could very quickly end volume. And what I did notice too on liquidation levels and stuff like that, so didn't actually sweep. There's still a hell of a lot of liquidation sitting in this area. So I'd be very surprised if so if we do sweep, it would potentially be a sweep to here, and then we can I'd be surprised if we roll them out of bounds. Just to draw it for you, we probably, like, most likely at the moment, I think we come down to 23k roughly, maybe a little bit below those volume areas, and then we potentially bounce back up, probably for a test of this value area high again, so back up to around the 26k mark, roughly where we're at the moment. Maybe, depending on the overall economic climate, we may go down to 20,000, 19,000. In which case, I think that would be the bottom. If we hit that level, I'd be surprised unless the economy completely. Other alternative here is obviously we get a sweep of these lows. Doesn't go as deep as what we think it might. So into the 25k by 24s, and then in which case a little bit of retracement down to the 26k, and then up. That would be quite a bullish sign. If we got that, I'd be looking for sort of new highs into the 40,000 mark by the end of the year. I wouldn't expect any all-time highs on crypto in the year, but definitely a decent bet. Otherwise, to get that downside, I think the overall market just on the recession thing, I don't think it's here yet, mainly because the yield curve hasn't uninverted. So for a recession to hit, typically, like the yield curve being inverted does typically mean that we'll get a recession. As you can see from that first inversion, July last year, it's year. Typically, if you go back and look at history, you actually have to convert. So it has to get back below the 2-year yield. So just looking out for that. The 10-year is on the rise, which will basically do that. So is the 2-year, but there's just no one is interested in buying 10 years, 20 and 30-year bonds. Because they're getting better yields. So that pushes price 10-year up, and you end up getting that conversion. So that typically means the recession gets called pretty soon after. Something structurally wrong. Looking at money supply, it's back up a little bit. So what happens if we do have that uninversion, if we do get a recession or government's just putting more money down the road, and let it happen, which is probably the right thing to do, to be honest. This could basically be a double top on the Nasdaq here, and that's on the monthly. We've got 9 days. So yeah, the markets aren't looking particularly strong at the moment. If we drop below this, that's a really stop. Okay. Target. Not having a great weekend. A lot of indecision at the moment in the market. Doesn't video sell off overnight. That was a news event, which I was telling someone today. I wouldn't be surprised if the Nvidia earnings was a catalyst for market crash. Doesn't look like it's been so far. It's pretty neutral. Mainly because it's all retail. Like all the growth of S&P 500 and stuff in the last few months has been largely retail. There hasn't been much institutional money going into it. And I think the fact that we're pretty much hitting double tops, I think this is potentially a buy for top. So it's just sort of waiting to really punish retail investors. So in saying that though, that's kind of the double top there. This may be all, but we're in no man's. What could we get happen here? That's a rejection of the 50 EMA. Eventually we head back down to this 200 EMA, so 13,700 target. Which would close a gap. If we get down to 13,650-ish, that'll close another decent gap on the Nasdaq. So yeah, it's looking more downside at the moment. Anything play out. We'll see. The other thing I was going to mention, just out of interest, do have one indicator. So this indicator here has been pretty good at predicting that like 90% gains without leverage over the last year and a half, roughly. It's not too bad, but a lot of that is in big chunks, and it's been pretty flat, to be honest, for a while now. But these big bumps are when it gets these big drops, right? it does have some issues around false trades because it basically it's based on Bollinger Band breakouts as its prime setup, and it also uses RSI stuff as well. But this one here is looking like a decent setup. Whether it's as profitable as sort of these ones here, wait and see. But yeah, it's predicting a decent drop on ETH. We'll see how that goes. What you've got to watch these ones is when it comes back across and hits the Bollinger Band again. Typically, that's a point at which it will drop again. Yeah, it's not. There's nothing on the charts at the moment, put it this way, that is telling me it's a good time to buy ETH BTC. It's all pointing towards either a recovery of these wicks, shaking out a little bit more leverage, or just further downside. And typically, if you're going to shake out leverage, you actually do it relatively quickly. So you come back down. When you just sweep those key levels, it jumps pretty quick. It's just not looking like that. That's about it, I think, at the moment. Dixie is still pretty strong as well. So a strong Dixie essentially. Strong Dixie means typically your stocks are going to go down value and it does go down. So gold, it's coming down as well. A little bit of support here for gold. Probably going to do a sell here. Let's do that 50 EMA about. Particularly if stocks go coming down as Dixie's going up and as the yields are going up. So if the 2-year and 10-year kept going up, expect gold coming down. Alright, so that's a good one. Trading 2 years in this indicator. Alright, that's it for me for today.